Well, hi guys, welcome to this Money Control live stream. It's a Tuesday morning. You're watching Morning Trade with me, Nandita Khemka. It's a truncated week, of course. We had a long weekend, and the cues coming out of global markets are fairly mixed this morning. GIFT Nifty hinting at a start below that 19,600 mark. But, the big positive, of course, is the cool off in oil prices. In fact, oil prices are down $7 compared to last week. Brent around that $90 per barrel mark. But lots of stocks in focus this morning, of course, starting with Vedanta. And we had auto sales over the weekend coming in. So auto stocks will be reacting to that as well. So lots to discuss over the next 30 minutes. And of course, all your stock related queries will also be taken up with our technical expert on the show. So if you have any queries, send them in to us on our YouTube feed as usual, and we'll try and take them up. But before we go any further, as usual, let's take a look at the top headlines at this hour. Wall Street ends mixed amid the renewed spike in 10-year bond yield, which is at the highest since October 2007. Asian markets too open mixed, while the GIFT Nifty, as I mentioned, is implying a start below that 19,600 mark for the Nifty. Oil prices tumbled to a 3-week low, with the Brent trading around the $90 a barrel mark, profit booking after the recent rally, and a stronger dollar weighs on prices. Vedanta shares will hog the limelight today amid mega restructuring plans. Anil Agarwal-led conglomerate will carve out 6 independent companies, with shareholders getting 1 share in each of the new listed companies for every share in the currently listed entity. Meanwhile, after Moody's, S&P downgrades the metal giant and puts it on credit watch negative. TVS and Hero Motors September sales beat estimates in a strong show. Eicher's monthly sales fall, but still meet expectations. M&M's SUV sales remain robust, although tractors slow down, while Maruti sees low single-digit growth in September. The market leaders' half-yearly sales top 1 million for the first time. 2 new listings to watch out for today. JSW Infra expected to list at a premium of 15 to 20%. The 2,800 crore P issue was subscribed over 37 times, and strong demand from QIBs. And Vaibhav Jewellers is the other one that will be making its debut today. Will it dazzle on debut? That's something we'll have to watch out for at 10 a.m. Well, let me first bring on board our technical expert for today. Joining me is Sacchitanand Uttekar of Tradebulls Securities. Well, good morning, Sacchitanand. Friday we saw a good up move coming in after days of weakness. In fact, we did reclaim that 19,600 mark. Do you think, looking at October, would you say that we could make a dash at that 20,000 mark once again this month? Or would you say that, historically October hasn't really been great, so we will remain sideways going forward? What is your outlook for the month per se?
Good morning, Nandita, and thank you for having me on the show. Clearly, if you look at the seasonality effect, then October, the probability is that we may end up in the green. If you look at the data for the last 10 years, I think only in 2018 we saw a negative return. But net, if you look at the data flow, October has always been on the positive side, has been more on the positive side. Even if you look at the current setup, we have been seeing Nifty oscillating lower. On Friday's session, we saw an inside bar formation. A good short covering led rally did help the Nifty to sustain above that 19,600 mark. But if you look at the last 2 weeks, we saw this particular gap sequence which started at 20,100 with a breakaway gap. We saw a runaway gap at 19,900, and probably there was a room for an exhaustion gap to conclude the termination of this particular corrective wave that we have been seeing so far. So I think today's opening is indicating that probably we may see that exhaustion gap in today's trading session. And critical is that after this good strong rally from the base of 19,200 towards 20,200, we saw that fresh impulse getting unlocked in the first half of the September series, and post that the corrective has been really gradual. We are sitting at a very strong demand zone. So we don't expect the Nifty, to scale lower below that 19,200 on a broader structure. But immediate basis, I think 19,500, 540 is a good strong demand zone wherein the Nifty could see a reversal getting established. And probably on the way up, it does have a hurdle at around 19,700, 720 kind of a zone. Which could be a critical resistance even for today's trading session. But net, I think we are at the fag end of this particular termination, and probably we may see a strong reversal sign getting developed here. So the strategy is to avoid, short positions here. In case if we have a strong gap down, I think that particular gap down would be a good opportunity to create some long positions. And again, we may see, Nifty resuming its positive trend, the bullish trend, during this particular week itself. There's a minor hurdle at 19,700, 740. But eventually for this particular series, we do expect that the Nifty could scale back to 20,000 levels.
All right, expect levels of 20,000 perhaps this month itself. Hold that thought, Sacchitanand. We'll talk about specific stocks, in just a bit. Let me also bring on board my next guest for today. Joining me is Rakesh Arora, who's the founder of Go India Stocks, and he's joining me on the phone line from Mumbai. Hi, Rakesh. Great to have you on the show. The big story today, of course, the demerger plans, at Vedanta. Would you say that, this whole demerger will unlock value for shareholders, especially the minority shareholders going forward?
Good morning, Nandita. I don't think there's going to be any, value unlock because, normally what you expect is that holding company discounts go down when demerger happens. But in this case, the largest value is driven by one of the subsidiaries called Hindustan Zinc, and that will still remain, under a holding company, Vedanta Limited. On the contrary, currently, market ascribes around 20% holding company discount to Hindustan Zinc shares held by Vedanta Limited. But once it becomes a pure holding company, the discount can actually increase to 40% or maybe even more, as we have seen in cases of Grasim or JSW Holding or Bajaj Holdings, etc. So I don't see any major value unlock for, the retail shareholders at least.
Hindustan Zinc, of course, will also be undergoing a corporate restructuring. And, of course, Hindustan Zinc will remain with the listed entity, that's Vedanta. So in that light, what would the outlook be for Hindustan Zinc shareholders? Do you see any value creation there?
So first of all, I'm not very sure that Hindustan Zinc restructuring will go through, given that government is such a dominant shareholder there. And in any case, the two businesses which they're talking about demerging, they are small in scale as compared to the zinc. So I would think, propose it.
All right. But the big question here is, will it really solve the parent Vedanta Resources debt issues? We saw Moody's downgrading, the rating for Vedanta Resources. In fact, even on Friday, S&P has also downgraded, the credit rating and has put it on credit negative watch. But, going forward, the demerger rather will take 12 to 15 months. But of course, we have $2 billion worth of debt repayment coming up in 2024. In that light, would you say that it would actually resolve the debt issue in some way, or do you think that main issue will persist going forward?
So 2024, they have largely, covered their bases. So they just sold 6% equity, which brought them $700 million, plus dividend and royalties, etc. So they already have inflows of more than $2.5 billion. So 2024 is well covered. It is 2025 where they have $3.8 billion worth of, repayments, which is, kind of the bottleneck or the hump they need to cross. And that this whole demerger is preparation for that, because if they are not able to roll over the debt, they might need to raise capital by selling some assets. And having a demerged entities, the tax outgo will be limited to long-term capital gain. If it is into a conglomerate structure like this, currently that they have, there would be dividend distribution tax, etc. also. So they're trying to reduce their tax outgo, and it will be easier to sell, standalone businesses.
Right. And, my last question to you, what would your view on the stock be at the current juncture? Recently, it hit 52-week lows. Would you say the valuations look attractive now? And, is the risk reward looking favorable at this juncture?
First of all, I'll say that for long-term investors, there's nothing in it in terms of demerger and value unlocking. So long-term investors can stay away. But having said that, the stock has corrected quite a bit. And the valuations are reasonable. There's a 6% dividend yield in a base case scenario. That should also support the stock. So probably stock has limited downside. And if they are not selling further Vedanta Limited stock, Probably, there's a trading bounce there, but long-term investors should stay away from it.
All right, long-term investors should stay away from it. That's the call. Rakesh Arora, thanks a lot for taking out time and joining in this morning and putting things into perspective for us. But technically speaking, Sacchitanand, what's your view on Vedanta, given the fact that Friday we saw a very smart rally coming in after the stock hitting 52-week lows? From a short-term perspective, what should investors do with the stock?
Well, Nandita, I think the stock has already displayed a very substantial correction. It is now quoting near its 200 monthly exponential moving average support, which was placed at around 205. And day before yesterday, on Friday and Thursday, we saw some very strong built up and a short covering move. So I think this is a good demand zone wherein the stock can be considered from a short term perspective. We are expecting that the stock could again, rebound back towards the 245, 250 kind of a zone. On the lower side, the support at around 205 looks very strong. So in case if we see a drop in prices in today's trading session, I think 220, 215 could be an ideal zone wherein the stock can be, bought from a short-term perspective with the stop loss at 205. And, one can hold on to this particular counter because if you look at the monthly structure and the weekly structure, there's a possibility that the stock could, confirm the double bottom formation, and there could be a trend reversal, going forward. So the stock has already displayed a correction of more than 35%. And if you look at the relative performance, it has been underperforming the overall indices. So probably there's a scope that the stock could see a revival, going forward during this particular series itself. So I think any drop towards 215 would be a good zone wherein the stock should be bought in one's portfolio. 205 would be the stop loss, which can be maintained on a weekly closing basis. And for this particular series, 245, 250 can be the upper side of this particular range.
All right, that's the view on Vedanta. But let's shift focus to some of the auto sales figures that have trickled in over the weekend. Maruti Suzuki saw a 4% uptick in its, September sales. If you look at Tata Motors, the domestic sales were up just about 2% or thereabouts. M&M Tractors, tractor sales, of course, remains in a spot of bother, even though for M&M, the SUV sales have been strong. Hero Moto and TVS Motors, these two-wheeler makers have clocked in strong growth in the month gone by. Given the fact that we are looking at a festive season coming up, what is your view on some of these auto stocks? Maruti looking more attractive at the current juncture, or M&M is something that you would go with? And among the two-wheeler pack, Hero Moto or TVS Motors? TVS Motors is one stock that the street is really upbeat about. What's your own view on that?
If you look at the relative performance, then definitely Maruti stands out. We are still expecting that the stock has further headroom available. Even on an immediate basis, we may see a swing towards 10,860 kind of a zone. There's a very strong base at 10,200 for this particular series itself. So even if we see a decline, that decline would be a good opportunity to create some long positions. On the higher side, there are no signs of any exhaustion yet, which has been seen on Maruti. And probably, if we keep an outlook of couple of months, then we may see this particular stock, heading towards 11,600 eventually. So even on a declines, I think the stock should be a part of your portfolio. The base is very strong at 10,200. Probably one may keep, trailing the stop losses higher at this particular juncture. When we look at the two-wheeler space, definitely TVS Motors has a very similar structure as compared to Maruti. And if you look at the price performance here, we have been following a higher top, higher bottom sequence, and the relative strength is also improving. So the moment the stock starts trending above 15,150, we may see a fresh impulse getting re-established. We may see the prices, getting elevated towards 1630 on a positional basis. And even here, some long positions can be recommended. The trading stop loss can be placed at around 1495 on a closing basis.
All right. I think on our feed, we had a query coming in on TVS from Puneet Tandon. Hope that answers your query. But, Moving forward, let's talk about some of the other stocks that will be in focus. This morning, in fact, there was a news report which said that, VIP Industries promoters may be exploring a stake sale in the company. Deal may include a potential open offer and it could be worth as much as $1 billion, and promoters may completely exit the business. That's, of course, according to reports. But if you look at VIP Industries, over the last 1 month, the stock hasn't really done anything. On a YTD basis as well, it has, I think it has given negative returns. Do you think this bit of news will come as a booster of sorts for the stock, and perhaps here on we could see some bit of upside coming in?
Has actually done nothing in the last 12 months of oscillating within this particular band of 700, 730 on the higher side, and there has been some support at around 600. So the recent development, shows that the price is forming a base somewhere close to its 200-day exponential moving average, which is placed at around 630. But on the higher side, it needs a firm breakout above 730 kind of a level. So probably post that particular breakout, we may see a very strong, a breakout on its monthly scale as well. The larger degree is still, sideways to positive. But the way, the price action has been evolving in the last a month or so, there is a possibility that the stock could eventually, see this particular breakout getting materialized, and probably we may see the stock, scaling towards 840, 860 kind of a zone. So I think, the stock can be considered even from a trading perspective. As of now, the stop loss can be placed at around 630.
All right, 630 is the stop loss to watch out for on VIP Industries. But let's talk about, the likes of ONGC and Oil India, given the fact that, the government has increased the windfall tax on crude. And of course, we've seen crude itself ease off from $97 to $90 now. Would you expect some of these companies or stocks rather to come under selling pressure this week?
Well, we may see some selling pressure here, but when we look at ONGC, the support looks very strong at around 185, 190 kind of zone. So on a decline, I think the stock can again be accumulated. There are no signs of exhaustion or a reversal here. In fact, if you look at the monthly structure, we have an evidence of a clear-cut rounding bottom formation, and the breakout was well established, last week. So I think the support is well defined at 185. So any declines near to that particular level would be a good opportunity to, add the stock in one's portfolio. From a trend perspective, there could be a violation in this particular trend only in case the stock starts trending below 182. So probably keeping a stop loss at 182, one can still consider long positions here. Eventually, we see ONGC scaling towards 210.
All right, that's the view on ONGC. But, since we are talking about oil firms, let's also talk about some of these OMCs now. We have a query coming in from Parth Chaudhary. Wants to know your thoughts on IOC. Now, of course, in the wake of rising crude prices, some of these OMCs have come under pressure as it would squeeze their marketing margins. If you look at the chart of IOC, rather, it hasn't really done much in the last 1 month, just about up 1% or thereabouts. So from here, how is the outlook looking like for some of these OMCs? BPCL, it has been, in fact, one of the nifty losers for quite some time now. How would you play some of these counters?
Immediate trend still looks weak. We have a negative crossover on its daily scale. The resistance is well defined at 95. So unless we don't see the stock trending above 95, there may not be any firm reversal in place. And on the lower side, we may see IOC slipping towards 85, 86 kind of a zone. So I think they are still good candidates from a sell on rise perspective. Its daily ADX has started trending near 20 marks. So probably, a breakdown below 90, and we may see a very sharp cut in the prices as well. So I think it's better to, retain some short positions here, anticipating a further breakdown below 90, and probably the stock can be reviewed once it starts trending near that 85, 86 kind of support.
All right, that's the view on IOC. Let me take up a few more queries that are trickling in this morning. Selvan KBB wants to know your thoughts on MCX. Of course, the much anticipated shift to the new platform, of course, has been put in abeyance, as per SEBI's suggestion. So that was the one big trigger for the stock, and we saw a fair bit of run up on the counter in the in anticipation of that. But now, since that's not happening, we saw the stock come under pressure on Friday. Do you think it would extend the losses this week, because that was one big trigger that the street was actually watching out for?
Well, last week we did chase momentum in this particular counter. We identified a breakout somewhere close to around 1800 levels, and the pattern, which indicated a price target of around 2040. That particular pattern target has been achieved. So as of now, we may see, a corrective wave here, but we are not expecting any major deep correction. Probably we may see the stock cooling off and returning back towards that 1900, 1940 kind of a zone. I think that will be an ideal level wherein the stock may see some consolidation before it commences its next leg of the rally. So the structure still remains very positive. On a decline, I think the stock can be accumulated. But as of now, in case if someone is already holding on to their long positions, then a probable trailing stop loss can be placed at around 1940 on a closing basis. But I would rather avoid building fresh aggressive long positions here. After a very strong rally, there is a good possibility that the stock may see a time-wise correction here, and we may see it consolidating within this 1940 2100 zone.
Right, that's the view on MCX, but we have a query coming in on HCL Technologies from Karthik Reddy. Of course, we know that the IT giants will start reporting their earnings starting next week. I think 11th and 12th, these are the two dates when you see TCS, Infosys, HCL Tech report their numbers. So ahead of numbers, how should one play HCL Tech in particular, given the fact that we've already seen Accenture give out a bleak guidance? So, some of the optimism may have, faded. So would you see downside going forward for HCL Tech now?
Well, we are expecting that the recent corrective may extend towards 1200 zone. So probably that will be an ideal level wherein the stock may be considered from a long perspective. But as of now, the trend is corrective. The immediate hurdle is at around 1260. So in case if someone wants to build positions, I think one can consider a short position here with the stop loss at around 1255 on the higher side. And on the lower side, the stock can be reviewed at around 1190, 1185 zone.
Right, one last query, if I may squeeze in. Deepak wants to know your thoughts on Tata Teleservices. Would you have any view on this stock as to where it's headed from here?
Well, the stock has been trending higher. It has been forming a higher top, higher bottom base. The recent base was formed at around 75 levels, and from there we have seen a very strong impulse move. But as of now, I think the stock may continue its consolidation. We may see it forming a higher base somewhere close to around 80-84 zone. So probably it may spend a good amount of time within this particular bracket of 100-105 on the higher side and 80-84 on the lower side. So on a declines, the stock can be accumulated, but as of now it can be avoided.
All right, avoid Tata Tele. That's the view. Hope that answers your query. But with that, we've come to the end of the query segment. But Sacchitanand, what are you recommending for our viewers this morning?
Well, three stocks all on the long side. We are expecting that the market could see that final exhaustion gap, and we may see prices stabilizing during this particular week. So Bajaj Finance is one particular stock that displayed a very strong breakout on its monthly scale. If you look at the broader structure for the last 2 years, the stock was oscillating within this range of 7,600 on the higher side and 5,300 on the lower side. Now, this is the first time wherein on a monthly basis, the stock has managed to close above that 7,600 mark. If you look at the weekly structure, there's a clear-cut a bullish flag formation indicating a price move towards 8,100. So from a trading perspective, we are recommending long positions here. The stop loss can be placed at around 76.40, and the stock can be accumulated in one's trading portfolio. The other stock which has seen some positive action after a corrective wave is Indian Hotels. If you look at the weekly price structure, there's a rising 3 formation on its weekly scale. The base looks strong at around 400, 405. We have already seen a short covering move last week. We're expecting that this particular move may continue during this particular week, and we may see this particular stock rising towards 430. So even here we are recommending building long positions with a stop loss at 402. And the last final trade is on the cement pack, and within this particular pack we are liking the structure of Dalmia Bharat. We are expecting a price move towards 2580, and hence long positions can be recommended here, keeping a stop loss somewhere close to around 2330.
All right, those are the stock recommendations coming in this morning. Remember, Bajaj Finance, of course, will be in focus as the board will be meeting on the 5th of October to consider capital raise as well. But with that, Sacchitanand, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us, and of course answering all of your queries so patiently. Well, with that, we've come to the end of this edition of Morning Trade. But of course, don't forget at 10 a.m. 2 listings, JSW Infra, of course, saw a very good response from QIBs, and the entire IPO was subscribed 37 times the shares on offer. And we also have Vaibhav Jewellers that will be making its debut. Will it dazzle or not? Well, time will tell. 10 a.m. is when you'll get to know. But for now, it's a goodbye from me. Thanks a lot for tuning in. And, don't go anywhere, because coming up next is Opening Bell from the entire team. Thanks a lot for watching.